Hello investors. The Nifty 50 index has witnessed a 14% year-on-year growth in earnings for the March quarter FY24, aligning closely with our projections. However, a closer examination revealed a dichotomy in results of the March quarter, with positive trajectory for the industrials, infrastructure, capital goods sectors juxtaposed against a downturn of consumer-oriented stocks. While companies benefiting from the India CapEx theme demonstrated resilient earnings, there was widespread weakness observed in consumption-oriented stocks, particularly those exposed to the rural income and the lower income segments of the economy. Some company managements, however, expressed optimism regarding a potential rural recovery contingent upon favorable monsoon conditions. We anticipated 2024 to be a year marked by transitions, primarily driven by the fact that approximately 50% of the top 20 nations are undergoing national elections in 2024. This was especially pertinent as two of the largest democracies, US and India, conduct their elections to choose the government for the next 5 years. In this context, we note that Indian elections resulted in another term for the incumbent government. Hence, we would broadly expect policy continuity over the next 5 years. Also, we see manufacturing-related sectors or themes continue to lead the way in Indian equity markets. With India Inc.'s capacity utilization hovering around late 70s, we anticipate that the central government will likely aid capital formation within Indian economy in the coming years. However, keeping in mind the upcoming state elections, we surmise that there could be a few populist measures to boost rural consumption as well. If we subaggregate the overall market valuations into two categories, large cap and a combined group of mid and small cap companies, we'll find that the large cap valuations are roughly at par or up to 5% discount to their 10-year average, indicating that valuations of large cap stocks are reasonable. In contrast, mid and small cap valuations are about 20 to 40% higher than 10-year average, making them relatively expensive. However, this is only part of the picture. From an earnings growth perspective, mid and small cap companies are experiencing growth rates almost twice that of large cap companies. Hence, we need to consider valuations and earnings growth together to get a comprehensive understanding of the current market conditions. Anticipating a period of noisy macro conditions dominated by elections in 2024, we believe that aligning the portfolios with areas of earnings resilience is a prudent approach. In this context, we anticipate that earnings will likely demonstrate resilience in sectors such as industrials, power-related industries, NBFCs, and real estate. Lastly, we identify IT services sector as a dark horse of 2024, positioned as a strategic play on bottoming out of global growth throughout the year. Given the favorable valuations of the large caps and the positive earnings momentum of mid and small caps, we consider maintaining a balanced portfolio across market capitalizations to be a prudent strategy in the current market conditions. For investors with reasonable risk appetite, we recommend multi-cap portfolios. For conservative investors, we would advise investing in flexi-cap portfolios, while for aggressive investors, we recommend mid-cap portfolios. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.